Hi everyone, hope you're all doing well, and today I'm going to talk about National Express stock, which is doing really well at the moment. I'm currently up 150% since I started buying this company last year, and yesterday was a very good day for the stock as well. It was up 10%. Now, I actually didn't realise how well this company was doing yesterday. I was kind of doing a private live stream on the Patreon, so if you do want to join that, the link's in the description. If you do want to start buying some shares in National Express, there's a link to a free trade account in the description, and you join through there and you also get a free share as well, which is pretty good. But I didn't really realise how much National Express was actually up. I was on the live stream, I was like, oh yeah, Boohoo's had a really good day, Greg's a fantastic day, and I looked, it must have been like 12 p.m, yeah. And I looked, and the stock, National Express was up like 4 or 5%. I was like, yeah, that's a really good day. But everyone was like talking about it so much, I was like, is it still up 4 or 5%, or has this company gone up even more today? And I looked again and I was like, okay, it's up 10%. That was a really good day. So yeah, it's a fantastic day yesterday for National Express stock. And yeah, I started talking about this stock, I think it was August last year, and I said that I didn't really have many plans to buy this company, but the share price just went lower and lower and lower. And I think it got to a point where it was even lower than COVID lows, and I was like, oh my goodness, this is such cheap for a decent company. And yeah, I made a video back in August saying, I think it was August, I made a video back in August saying I'm going to start buying this company, and yeah, I'm obviously up 150% since I started buying them shares. I know a few of you guys as well might have caught the video, and some of you guys might have invested into the company as well, and I'm sure some of you guys are somewhere roughly up about 150% as well in the company. It's been a crazy run, but I guess now that me, and I guess if you're watching this video you probably have some interest in National Express, I guess you're kind of looking, right, we're up 150% now, like what do we do? Do we carry on holding? Do we carry on selling? And yeah, today I kind of had a look into the company, reassessed everything, and kind of thought, right, I'm up 150%, where do I see this company going? You know, is it time to go sell out this company? Is it still time to hold the shares? And I kind of had a re-evaluation of where I'm at with the company, and I'll share that all with you today, guys. So yeah, and we'll be sharing a lot of information, and we talk about how well the company was doing pre-COVID, and like I say, where I see the company going after COVID. So first of all, it's worth saying this company is not just based in the UK, it's now a worldwide company, growing revenues worldwide, and also it's not just like a coach company. I always think of National Express, you always just think of coaches, but around the world it offers many transport services, and yeah, it's a great growing company with a great reputation, and that's why they've been winning so many contracts recently, and as well as that over the years. So just to show some of the contracts this company was winning, there's a list here of contracts they won. There's a lot more as well. They're starting to win a lot of bus routes in America, so the US side of it was growing pretty well. Also on the German rail side of it, the German rail side was growing at like 33%. So when we look at like what are the catalysts for this going up, like is there any other positives that were going on? And there is positives going on. Like they have over the last kind of few months really, or last year, have been winning a lot more contracts, and that is based on because they have such a good reputation. So yeah, on the US side of it, the US growth is doing really well, and also on the German rail side of it, the German rail is expanding huge, and there's also a couple of other contracts as well that are not mentioned here that they've won or are extending their services. So just to show how well this company was performing with a lot of these new contracts just right before the end, well, when we last had normality, we can see here that on the earnings report it said pre-pandemic performance was particularly strong, building on last year's record results. Revenue was up 17% in constant currency in January and February. So the company was growing at a very good rate, you know, revenue at 17% growth. Historically, this is a company that grows at 10% revenue growth. So 17% was a fantastic amount of growth. So just bearing in that in mind, 2020 was supposed to be a fantastic year for this company and better than what they normally do. So we've also got to bear that in mind, that you can see some of the contracts they were winning were really starting to take effect just right before the pandemic as well. So you can see that the company has always grown revenue at a decent rate, just shy of about 10%. Profit as well has always been a very good growth company on the profit side of it. So I think that they will carry on growing revenue, and probably what they have here on Simple Wall Street is wrong, because they are projecting revenue to grow at a decent rate, but I think it'll even be faster than this because of all the contracts they've won, and also profitable. It's always a profitable company, so that will carry on doing really well. Just a note on the updated balance sheet, it has got slightly worse, but you would expect this from a company that's not really been operating. They've never had an amazing balance sheet, like it's always been an okay balance sheet, like pretty much equal debt to equity ratio, which just got slightly worse. But saying that, they have 1.5 billion in debt, and also they've still got 500 million in cash, so they're still pretty healthy on the cash to debt front, and I'm pretty sure as well it would be very easy for them to raise capital going forward. Now, on this chart, it says that it currently pays, well, if it was still paying a dividend, it would have been a 3.9% dividend yield and a 15p dividend. It said it is looking to probably pay its dividend again towards the back end of 2021. We'll see what happens there. But I think it would be good just to get a little bit more of a stronger cash position and pay a little bit of a debt before it does do this. But that's what they said last time. I mean, they might change that a little bit going forward. But if you have about the same sort of average with me and you're about up 150% right now in this company, in fact, if they did go back to this dividend and you have the entry price the same as me and they paid the same amount in dividend yield as what they did in, dividend amount in 2019, we would actually get a 10% dividend yield on this, which is something worth noting, which I'll talk about in a little bit. Now, there is only one negative that's really changed with this company, is that the CEO did leave and the CEO did move to Persimmon, which I was like kind of thinking maybe it's a good time to buy Persimmon shares, because you can see how well of a job Dean Finch was doing at National Express the last few years, so I did consider that. But I guess that's the only little warning that I would say to you, that there has been a management change, but probably nothing to worry too much. And yeah, like I said, maybe the balance sheet's got a little bit worse, but nothing kind of crazy really. Now, I guess the kind of thing is like, now that I'm up 150%, some of you guys will be up quite a bit as well, is like, with all that taken into consideration, what now? Is it time to actually go sell these shares and take the profit, or is there a lot more upside from here? So we've got to remember what I showed just a few minutes ago, which is there's a lot of new contracts being won. And when we saw a lot of these new contracts starting to take place, the company was growing at a 17% pre-COVID growth, January and February. So the growth was the best ever from the company in January and February. And 2020 would have been a blowout year for National Express if it wasn't for the CV. So we've got to remember the company was doing the best it's ever done and would have set record numbers, and it's had a lot more new contracts. So this is kind of saying that this company would have done really well. And if we look at the stock chart, we can see we're still a fair bit off 52-week highs. But I think as well, something to consider is that if it wasn't for the CV, this company wouldn't have 52-week highs of £4.50. This company, if it wasn't for CV, would more likely be a company now that was going to be above £5 because of these record numbers that it was starting to pull out on its revenue growth. So we've got to still consider it's still off its 52-week highs. It had amazing growth and it had loads of new contracts. So we can sort of base it off the 52-week highs that it's still kind of not, we're not there yet as high as it could go. But we've also got to remember that these 52 highs, it would have been even higher if it wasn't for the CV. This company would have been, in 2020, would have been a £5 stock for sure because of the growth that it was starting to put in. So I guess the next thing is to try and work out some valuations of where the company's at. So if the company was able to do 2019's revenue and profit, which I think it will probably start doing in the course of the next kind of 6-12 months, we'll start to get back to some normality, I guess. If it was to do that, the company is currently valued at a P ratio of 8. Now, I'm looking at this company and I'm thinking, we've got a company now that's growing revenue at 17%. It's a very good profitable company with good profit growth. I'm thinking, let's just say it takes a year to get to 2019's revenue and profit for this company. And then we get to a P ratio of 8. And I'm thinking, does this company deserve to be a P ratio of 8 for a 17% growth company? I'm thinking no. I think the minimum amount is probably 16, maybe even higher than 16, maybe 20 to 25. But I always like to be conservative on my numbers, but it kind of gives you where I actually think it could go. It's like being an analyst and sandbagging your numbers. So I think on the P ratio, I think it deserves to be a lot more than this. So I think if we can have a decent 2022 and then we have some growth as well. I mean, I'm basing this off 2019 numbers. Like say, we could have a massive jump on 2019 numbers, so that would knock the P ratio down. But if we say it's a P ratio of 8, I still think that this should be a 16 P ratio, which basically means that where we're at now, which is about £3 50p stock we finished yesterday, means there's probably still double the upside from here. And like I said, this is me being very conservative. So I'm looking at this stock thinking this share price could still double from here and could be a £7 stock in the kind of 2023. By the end of 2023, we could be talking about a £7 stock here based off the numbers that you could put in. So from here, I'm looking and thinking, well, if that's true, I'm still going to make near 300% on this company. So I'm thinking there's still a lot of share price gain to be having here. So I still think there's at least double the share price gain from here where we're at right now. So from a share price gain, I don't think we're done. Working out what numbers we got on the revenue side of it and the profit side of it. And like I say, I think that's been very conservative. The other thing as well to remember is that this National Express, a lot of the averages that we have in now, we will probably never ever get again. Unless something crazy happens with the stock, unless there's another pandemic that comes out of out of the blue, and we have the same scenario again, we're probably never going to see National Express trading down at like the £1.50 range. Like it won't happen. So you've also got to remember that you won't ever have a chance to buy these averages again, which is something really important to remember. And as well as thinking about that is that if you were to sell your gains right now, where are you going to put it? There's not many great opportunities out there in the stock market. So you've also got to think you could have a lot more share price gain, or if I sell out, where are you going to find to put, you might know a company that might do really well, but personally for me, I'm looking, from my situation, I'm like, if I do take my profit from National Express, I've got nowhere else to put it, so there's no point selling it from that point of view. And the other point that I said earlier is that if we did have the dividend paid back at the same amount, if you guys have the same entry as me, as well as having the potential to get a lot more upside, where I think this company could go to a £7 company in the next few years, and like I said, that's been a bit conservative as well, is that I'm looking at National Express, and if they come back with the same dividend, I'm going to get a 10% dividend yield on that, which is pretty good going. So yeah, it's hard from that point of view, because I think I still think this is going to be a £7 stock by the back end of 2023. So I still think there's a lot of upside there. I don't think I'll get this average again. I don't think there's a better place to put my money at the moment. And I also don't think, I also trying to think about the dividend, because if the dividend comes back, I'm going to get a fantastic yield off it. So with all that combined, where I'm at with National Express, even though I'm up 150%, I still think there's a massive upside. I think I'm going to be, making over a 300% return on this company. And as well as making over a 300% return on this company, I'm also considering the dividend side of it as well, which, like I said, I can't take too much in now, but it's just something that I'm thinking about, if it does come back. And that's a great yield. To get a 10% dividend yield every year off this company would be really good. So with regards to National Express, it's a great return. I still think there's plenty of upside, but I am nowhere near selling this company for the next 2 years at least. So that's where I'm at with this company. Still think there's a lot of upside, still holding my shares. We'll hold it for at least another 2 years yet. And hopefully you guys enjoyed that update, and hopefully some of you guys are enjoying your National Express gains. And yeah, let me know if you got some really good gains in the comments as well. I always like to see you guys hear some success stories with some times that you've invested into these companies when blood was on the street a few months ago, and you're getting your rewards now. So yeah, congrats, and I hope you enjoyed the video, and hopefully it gave you a bit more confidence maybe to hold them shares a little bit longer and not just take your profits just yet anyway. So thanks for watching. If you could smash the like button, if you are new, subscribe, and I'll see you in the next video.